Good evening. This is the Elliott Wave weekly update for the S&P 500, being recorded on Friday, January the 10th, 2025. Now, I'm going to start on the SPX. We're going to do a quick update because I actually have a lot to unpack tonight because there was a lot of really interesting occurrences over the last couple of days that have built into what we're seeing now. But on an Elliott Wave basis, I continue to look at the market as having completed the intermediate wave 3 at the December 6th, 2024, at those highs. Here in the cash market, that was 6,099.97. So basically 6,100 is where it completed in the cash. And from that point, it has been involved in unfolding in an intermediate fourth wave, which will consist of a minor degree A, B, C. So we're actually still within this very first part. If I'm counting this correctly, we're in the very first part of this larger decline. Now, we're getting a lot of not necessarily fits and starts, but we get decent rallies, we get decent declines, we get a decent rally, we get a decline, and even intraday, we're seeing that volatility, which is more measured in terms of how the options are being priced. But it's, to me, when I'm talking about the volatility inside the index, I'm really kind of making reference to how quickly these moves up and down occur. And that is really a reflection of gamma. It's a reflection of just, how things are moving around. And that all then goes to what I will be discussing next, which goes to where are we in this play against, are we in positive gamma, negative gamma? We're in negative gamma territory. What does that really mean? So I'm going to try to unwind some of that. And so that what we're really looking at, because, you keep hearing me talk about how the markets aren't really necessarily controlled by bulls and bears and having an opinion that we're going to go up based on X, Y, and Z, and we're going down based on X, Y, and Z. And it's actually, that's kind of been turned on its head a little bit. And I say that because I need to reference what really kicked this off this morning was stellar job report, and that the number of jobs that were created in December was way higher than what they expected. And of course, that just turns the whole volatility, the whole interest rate, the whole FOMC picture on its head. And that's really what kicked this whole thing off today. And by the time we walked in, we knew that the SPX was going to do this big gap down. And when it gapped down through the volatility trigger, it gapped down through the put wall, as a matter of fact. So again, I want to go over the Elliott first and then go back and tie in everything that I saw happening today in terms of the flows, the options, the capital, and the gamma flows. Now, back to the Elliott. I'm actually, again, as I've described before, I'm looking for a move, if we're just going to pay attention to Elliott, and he told us that a fourth wave will find its terminus, its endpoint, within the fourth wave of one lesser degree. While we're counting an intermediate fourth wave, one lesser degree is the minor, and here's that previous fourth wave. I keep pointing it out, but we're looking for it to actually come down towards the low end of that previous fourth wave. And that tells us that we should be getting back down towards 5120. That low is actually 5119. So we're kind of going to give it there between there and a little bit of room, I guess. And it also can exceed it, depending on how strong or what's going on actually in our country, in the world at that particular time when we're getting into that area. Now, so we have 236 support for this fourth wave at 55.50, basically. And then we have 382, which is the most common, at 52.07, and then that low coming in at 51.19. Then we have 50%, which is not that uncommon. It would be about number 3 most popular, and that is at 49.32. So again, we don't know what's going to be the conditions, what's going to be driving the market at that particular time, should we get down and close to that level. So here we are back up here at the top. And so if I'm counting this as a nesting 1, 2, 1, 2. And what that is suggesting is that it's subdividing. And it's subdividing within the A wave. So two things. I'm believing that that A wave is going to come in as 5 waves down. And now we've got minute 1 and 2, minuet 1 and 2, and we're inside that minute third wave. And actually today, what started to kick off was minute wave 3. No, excuse me, minuet wave 3. And as I break this down, because I'm on the daily, as I break it down, we're going to see how that actually did kick off. And it was it was another 1, 2, and then we're dropping into 3. So it's going to take a while for all of this to unfold. But I fully believe that we're going to end up at least 55.50 or below, and that would just be wave A. So minor wave A. Then we're going to get a minor wave B rally, and then we're going to get a minor C wave, which will likely be as crushing as this one was. Again, minor degree. It took 3 days for the S&P to drop from 55.66, reaching that low at 51.20. So 3 days, 400 SPX points. That's a big move. That's a very intense move. Where were we? We were in the negative gamma territory. So in other words, really what was at play was the gamma in the puts. Why? Because the market was sinking. And so at that particular time, it was unexpected. So what happens is you've got all this put gamma sitting short. It's negative. It's negative gamma. And as the market drops, it just devastates a position in terms of whoever is holding that position is getting longer by the point. Longer, 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 all the way down. So they're forced to react. Otherwise, they're going to just get annihilated. All right, back to the count. So right now, 1, 2, 1, 2. Let's drop it down right away to that 1 hour chart. And let's take a look at the inside of this thing. It's getting big. So we have 1, 2, 1, 2. And then as we come into here, we had 1, 2, 3, 1, 2, 3, 4, 5, 3, 4, excuse me. 1, 2, 3, 4, 5. Wave 1. Inside of this. So it's wave 1, sub-minuet wave 1 of minuet wave 3. And there's wave 2. And now we gapped. See that gap? That was the gap. And I gapped right through the put wall. So we started in very negative territory. And again, with the gamma now starting to explode in everyone's face who had the position on, we had to sell. And sell we did. We sold for the first 3 hours. And then we had a nice rally back. And then we sold again into that close, into the bell. So what do we got going on? Well, if this is 1 of 3, 2 of 3, 1 of 3 of 3. I know this is all just really breaking down into the series of 5s coming off. Now, it gets complicated. But if I'm going to continue to just follow this and count it in terms of 5 waves down, 3 waves up, 5 waves down, 3 waves up, and that's the pattern that it's continuing to follow. So I don't have any particular reasons to go outside of this particular view to say, well, what else could it be? I do have an alternate because that's just how I function. And that alternate would suggest again that we may still be within that intermediate third wave is not done. And that what finished up there was the minute. I'll go over that in just a minute. Let me just finish here. I know I'm a little bit jagged in how I'm presenting, and I apologize for that. So anyway, so we're coming off in this minuet wave 3 as a part of the minute third wave. So where can all of this go? Bringing this out to the 4 hour so I can get a full look. Bringing it here, and we're going to go from here. And we're going to go, yep, I can do that. And we're going to go right there, put that there. We're going down to here, and we're going to take it back up to there. Now, go ahead, right there. Come on, please. There you go. And I want to change this And that is going to be, we're going to put it in the right colors because it's all kind of weird now. They changed all my colors on me. And so what we want to do is basically look out at the 1618, and 2618. And then we're going to leave them all in that color. So you can see 100, where this minute third wave would be equal to minute wave 1 at 5782. We're going to call it support, but I don't think it's going to contain it because look what we got going on inside. So now I'm going to put in an additional. And we're going to do the same thing. We're going to go down to here, and back up to here. And we're going to change that color. And we're going to put those all in that minuet color. And again, I'm not interested in everything all up here. I'm interested from 1 to 1.618. So here we have where minuet wave 3 would be equal to minuet wave 1, and that's at 5,800. That we already know is support. Simply because it's 5,800 is a big round number. But I don't believe because the third is not going to come in. So, but it does come down. It does put in a new low there. And it does, and we need a little bit more so that wave 3 is not going to have any pressure on being the shortest wave. Remember the rule, and this is a rule that I do continue to hold very strongly, that a third wave cannot be the shortest wave. So therefore, I'm already looking for it to be longer than wave 1, just in case wave 5 decides to super extend, which it can. But if it comes in a little bit shorter than wave 1, well, then the pressure is on wave 5. Actually, the pressure is on the analyst. So that's why I'm always going to be looking for a little bit more. So with that in mind, 5782 brings this third wave down and then keeps it open. So why do I always look for more? Here is what I'm really looking at here. Now, again, if this is 1 of 3, we got 2 of 3, and we're coming down in a 3 of 3 move, it should slide through all of that and end up down here, and that's on the minuet level. On the minute level, we're looking at 56. Now, remember, that's just third of 4 and a 5, and then it could be a little bit quicker, and we end up down here again at that 55.50. So you can see how it's possible. But right now, it doesn't look it because you see, oh, that's all this sideways move and all this junk, and these rallies have been strong. But I think we're moving into a period where it might just go bam, 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 quickly down like we saw back in August of 2024. A little bit different in the wave count where we are, but it's that same intensity because why? We are in negative gamma playground. And so what do we see when when this starts to happen? We see the intraday moves fly higher, fly lower, moving in larger increments. And that's just because it's thinner, it's not as broad based. For example, today, it really, to me, because I watch the underlying that are inside the ES, that are inside the NASDAQ, and I'm watching those. And today was Tesla. I mean, pretty much it's like the market opens and then suddenly I'm looking down. I'm like, why is the market not really dropping as quickly as I think? As my system's slow, et cetera. And then I look down. Tesla, they jumped in immediately in Tesla. And again, here's the tick. It's not that they were suddenly bullish on Tesla. You go over and you look at what options could be trading, and they were selling calls and they were selling puts. So what are the dealers having to do? Sell the calls and buy the put. What's the hedge? Buying the stock. So when we consider like what's happening in the options flow is showing what's happening in the underlying, happening in the stock. And then that then converts over, right? Push higher in Tesla. It's weighted, and so it's going to create a little bit of an updraft in the SPX, in the S&P, and the ES, in the NASDAQ, etc. So it's not necessarily like, why are they so bullish on Tesla? I would think that they're not. But again, it's not how it actually was showing when you're selling calls and you're selling puts, and the dealers have to deal and have to buy. Okay, so with that in mind, I think that we're going to continue lower. Our levels are, we have 5,800, 5,782, and then we break. And the 5,700 handle kind of just goes by the wayside. I'm sure I'll be able to fill this in a little bit as we kind of get lower and I can start adding additional uh, levels as we work our way lower. Is it going to go straight down? It's going to feel like it. This one felt like it was just really dropping out of the sky. And then you kind of look at it, it's like, that wasn't that bad. Trading it, you're like, wow. So as traders, it kind of can get a little bit weird if you're a futures trader. It could have been very difficult because it was back and forth and all over the board in terms of how it was if you're building a position. Say, for example, you're just doing some dollar cost averaging and you're looking to pick up calls. And like, because you're just doing it maybe even for a day trade, even just for a swing trade. And then you're like, okay, where do I stop? Where do I not do this anymore? And it's like, these are decisions that are going to be made and can present problems for swing trades, can present problems for options traders or just any trader. Like, what do I do here? And because it's like, and it happens even to me as a futures trader because I'll dollar cost average because I'm not really expecting them to whack the market as hard as they do at a particular time. I'm seeing buyers come in and other like in Tesla, in Apple, in some of the other in the larger stocks, and I see them coming in. So I'm like, oh, okay, I'll buy, and then they whack it down. I'm like, well, I think that's going to end, and we're going to get another little updraft. And I'm not looking for it to run all the way back up to new highs. But again, just as a day trader, you're just trying to work a trade, and then end up you're down $1,600 or $1,500 real quick. That was the thing today. Real quick, you were down. That's how fast the markets were moving. Okay, back to the SPX. I'm looking for this third wave to finish, and we got a 4 and a 5, for that'll finish the minute third, and then we get another 4 and a 5, and that then completes the minor wave A, bringing it back out. Let's at least to the 4-hour chart. What does that look like? I think we can actually get between here and here and still be in an A wave, get a decent B wave rally, and then drop in a C wave like there's no tomorrow. And then again, we're still down to here. 51.20, 51.18, possibly below 5,000. Now, am I looking for below 5,000? I think as we get there, we're going to realize that even on a long-term basis, 5,000 is major support. Major support. It's like do not cross line. It's like the DMZ zone. Don't come in here. And I think if it should, it could really, really, really tip things over. So again, we got enough other stuff going on, so I'm not even going to go there. Let's stick to the technicals for right now. So right again, I'm believing that we still have additional downside to do. We get it going and then it stopped because it seemed to slow down today. And we went through two separate periods where the call flows rose and it went fast. And I think that was expiration, because today was an expiration. It was being off yesterday. It was trying to just balance things out, decide where they wanted to put things. And then we got a lot of these zip moves up and then the call buying, and then it just exhausted. And then it was almost like bam, just kind of doing this collapsing type of a scenario. So the call flows led us into this, a lot of signal giving if you follow the markets in that manner. So here we sit. I think we got our points here. I'm looking for additional strength to the downside. Right now, we're going to see what happens. Again, next week, we have a full week. So I think part of what's happening and a lot of the disjointed is that we had Christmas on a Wednesday, New Year's on a Wednesday. Then we come back in and the markets, the equity markets were closed yesterday and to observe former President Jimmy Carter's funeral. So, we were closed. So that was another break between when we're going to do everything. And then today we had non-farm payrolls. Whereas on Wednesday we had initial jobless claims and other numbers that normally we would get on Thursday. So going next week, we have a full week. Keep your fingers crossed, right? That nothing else comes up is going to shut down the markets. So I'm looking for a Monday through Friday that may just even things out in terms of the flows, in terms of where gamma and adjusting and just making it a little bit smoother. But so that would be to me that we might see more of a consistent move directionally. And for the Elliott wave, that would suggest that we continue to move lower as we are putting in a minute third wave, and within that, we are breaking. That is now subdividing into its own 5, and we're inside the minuet wave 3 of minute wave 3. So we're in a 3 of 3 move. All right, now going out to the dailies, let's just take a peek at how our moving averages are doing. Well, we can see that here we have it. Finally, the 8 has crossed over the 50, which, by the way, remains flat. Interesting enough, right? We had strong, not so bad recovery, and another strong with a gap, and it's just turning the 50, just today. So I'm finding that very interesting. The 20, again, heading lower. So if we get another couple of days where we have some speed without this pushing back and forth, I think these moving averages will both get below the 50, and all three will start heading down to that 200. And that eventually I am looking for it to get broken, because I know we have lower levels that we need to get to before this whole intermediate fourth wave is complete. Now, what's my alternate here? I'm going to bring it back out. I'm going to take a look here. I'm going to bring it back down to this daily. If my alternate would have to be that this 3 is actually what finished here. Now, what that would suggest is that minor 5 is not in, and intermediate 3 is not in. And all of this is a minute fourth wave. That's my alternate. It fits and it doesn't. And if so, then what we're seeing is that this minute 4 is getting ready to finish up. A little bit more, it needs a little bit more downside, and that we can see just within this move lower. Maybe 56.64, 56.16, and they're going to hold it. And so the whole thing holds above the daily 200, important level, daily 200 at 56.11, 56.12. And if that does occur, then maybe we do get a sizable rally. And guess what? If I move that 3 up to there and put the 4 down to there, then it's a minute 4 to finish the minor 5. A minute wave 5 to finish minor 5. And then we get the 3. Now, what are those? What does that tell us? 62. What supports that? Well, we have 62 as a call wall still sitting out there, because they put a lot of stuff up there. Maybe, right? We always think about these levels as being magnetized. You get algorithms that go into play, and then suddenly you're gushing for it. Same thing to the downside. It just kind of goes and it starts to head for it. Let's go over and look at the ES real quickly here and see what we can put together as we're coming out of all of this. Because again, I still want to spend some time, and I want to go over the flows a little bit as it pertains to the SPX and as it pertains to our markets connected to it. All right, so starting here on the daily, same deal. 3, 1, 2, 1, 2, and then a 1, 2. So I nested one more time. I'm going to drop this real quick down to the hourly chart, because we really this is where our concern is. We're coming in here. And it's not that easy to read. You can see even on an hourly basis, yep, nice up, nice down, nice up, but chop. And then we chop. And then we kind of chop. This one, very confusing. And then we kind of chop overnight, and then it just, bam. We got that number, and it just then finally coming in. So I'm putting it down as 1, 2. So minuet, 1, 2, sub, 1, 2, sub, 1, 2. So then again, this is a 3. And then it'll be 4, 5. And that'll put this 3 down here, a 4, 5 for this 3, and a 4, 5 for the minute 3. So here, we're looking for, again, bringing it back out, let's just say to the 4-hour chart, we have here. And now I can add some additionals. Let's go, actually, these would likely be minute. I need to change my numbers again. I'm going to raise these up to minute 1 and 2, my minuet 1 and 2, and then these aren't quite as low. Meant to do that earlier, but again, I sometimes just forget. So these will be the minute. And so this would be for minute wave 3. Get over here, change that real quick. Set all my colors. Let's go there. And we're getting rid of everything. And we're starting with 1 down to 2.618. And we're going to put those on. Yeah, 2.618 brings us all the way down to that low. So I'm not really going to be looking for that. But let me just go back because I'm only looking for this on the basis of a third. So let me take that one out. I would not expect it to go down there on a minute 3. All right, so, and then we have one more to add, and it's going to be right here to here. Come on. Bring this down to my hourly because I need to get that right. Not there. Activate and raise it up to where it belongs. There you go. And this one is going to be the minuet. So I will change it so my colors will be correct. Again, I apologize for that. All right, so here minuet's going to be this color. And again, we're taking out anything above 1, 1. And again, I wouldn't be looking for 2.216, but I'm going to bring it down this way. Now we're going to go back out to that 4-hour chart, take a look at what we got. And one more. All right, let me put in one more. We're going to line all this up because this thing is just kind of going all around. And that was there, and we want to go here and change the colors. And we're going to look for those colors. Are going to be the gold. Those are going to be the sub. All right, now bring it out to my 4-hour chart and see what I got. So you see we got a little bit of an overlap there. Our next overlap comes right down in here. So again, A wave A. I'm kind of thinking this is how far we can get, but these might be thirds. So we might have to reconsider exactly what we got going on in terms of, could this be A, B, and this is 1, 2, and we're 3, 4, and a 5? It could. It could. We got to let it unfold. Let's not get too excited about that we have to know in advance. All we have is our fibs. So we're going to say with some certainty, this seems to be some pretty strong levels right down in there. And that looks like it could be finishing all 3 of our levels here. So again, 56.20 down to 55.90. Nice little box. We got a $40 box right down there between 56.20 and 55.90. That seems to be a pretty good support level to put in our A wave. Then we get a B wave rally. All right, let's go over and just talk about for a moment. That's not what I wanted. Over here, bring it back to just the smaller one and see, there you go. Let's kind of just talk about what's going on in here. So when we go and we move things up to a higher level, we can see that we're deep into the territory where put gamma becomes dominant. And so what it's telling us is that being that we're already in negative gamma territory because this all shifted to the puts, it's like it also becomes a trader's market. And what I mean by that is like what we were talking about earlier, that we get these flows that take us up and then they bring it back down and take us up and they bring it down. Now, it might even be appearing to be in a tight range, but as you're trading, it's like it's just free flowing up, back and down and back and down. And so a lot of options can trade, a lot of positioning can take place. And so there becomes a trader's market. So, and the percentage moves, they tend to be bigger. And momentum really is what kicks in and carries the trade. So because we're in a negative gamma, so as things sell off, it pushes the momentum to comply in terms of traders need to uh, adjust their positions when things are kind of getting very crazy. Now, also, just for today, when we're looking at today and the S&P, right? So we can go back over and we can look at the SPX because that's really where it was taking place. Because SPX, it's the SPX options that are big daddy. They are the ones that just really trade. And if we bring this down and we're kind of put it on an hourly chart, you can see that's what we're talking about. So when we saw that right there, so here we got a very quick rise up and then this what they call flow exhaustion. So there was that initial move into the market and it kind of came in pretty much in the opening, which tells me that like it was sitting there. These were all pre-scheduled orders. And as the market started to open, they had to engage and they had to push them through, and they did. So, but it got real quick where we saw the market um, where it kind of peaked. So we got a very quick within that first hour, we got a quick call exhaustion, so to speak. And that drove us. So the call exhaustion came because it was real quick and they came in and bought them, and then boom, here is the exhaustion. Then we had another buildup, right? Where we just saw a lot of calls. So the call flow kind of rising up and then it peaked again at about, yeah, this is Pacific. So at about at 1:30 Eastern, and it's going to come right in between here. And then again, we got that exhaustion. So, and really what it was is that the momentum was shifting over to bearish. So, just more downside. And then that's how the follow through came in. So you got the momentum trade going and everything going. And really what was doing it was the option trading. So the option trading in the SPX. So, but the SPX, this, and it's the underlying inside of it being Tesla's in there, Apple's in there, Amazon's in there, Meta was the other one where they were coming in today. And here's the deal. You suddenly saw that, and this is no joke, Tesla up 10, down 14, up 14, all in one big swing. And it's like, wow, okay, what happens to your underlying? Well, the stock jumps, what happens to your index? It's going to follow suit because I've talked to you about this before. When the market gets in there and they're trading and they get a big sell basket and that gets lifted, that's done. And then what happens? It's like a vacuum. And when you've got these stocks trading at 600, 400, 300, these large numbers, they're not trading a nickel wide market. They're 50 cents, they're 75 cents, they're $1 wide. And the baskets are flipping it around, and you'll suddenly see they take the offer, they hit the bid, they take the offer, hit the bid. And that's how you get these moves going. So again, what I wanted to make clear today is that when we came in today with the market gapping. Okay. So what I'm going to equate this to is what we saw over in the Qs. It's NASDAQ, but again, Mag 7 sits in the S&P as well. So here we are. We had in the Qs, let me just kind of put that up. And I know I shouldn't be talking Qs with the S&P, but here I am doing it anyway. So the 515, so here we are, 515. This is overnight, folks, overnight. We went up there, we gave it our best peak. The volatility trigger sat at 515. And when it couldn't hold and it broke, all hell breaks loose with it. Then at 5:30 a.m. Pacific, which is where I live in the Pacific time zone, we got that number. We got that non-farm payroll. What did that happen then? It took out the put wall, which sat at 510. Now you've got momentum via the gamma telling you to sell. And it just dropped and it dropped. And then what did we get? The relief. The relief rally brought us back to that put wall. And it held. They tried to get it back above, which then would have shifted things back over to like it's okay to start selling vol. Failed though, and then see what happened? Bam. So what this is, what I'm adding this for, so that we can get some type of an idea of what's happening when we're talking about a volatility trigger. We're talking about a put wall and a call wall, and I'm bringing this up now because when the memberships are going to start on Monday. Hopefully, I got my fingers crossed because I did everything I'm supposed to be doing, and so we should be able to get in there. When I list it, you'll be able to see it, but you also have the manner of how you can then purchase that membership through YouTube. It's all done through YouTube, but I've lined everything up and I've included everything and set up my everything that I should have to get it going. So we're going to keep our fingers crossed on that, but that's the plan. So, but the information that I'm telling you now will be more detailed daily in the SPX or in the S&P and in the NASDAQ. And depending on what level you may or may not buy in terms of a membership, it also will be in the IWM and it also be in the Dow. So actually the IWM, the Dow, I'll just be including the analysis. But in any case, I want to bring that up again. And one other thing I want to add right now, because if people are interested, and then this is going to fall under Sasha's realm. Sasha right now does the NASDAQ. But Sasha's also trades in crypto and altcoins, and so a lot of things there. And because I have been working with Sasha for quite some time now, I can tell you he's very good with Elliott and just with market movement in cryptos. And so we have decided that we will add an additional membership and we will start to cover, or he will start to cover crypto and some the altcoins and probably Bitcoin, or maybe I will do Bitcoin and he'll be doing a lot of the altcoins. We'll see. But right now we're just putting the feelers out. If there's enough interest, then I will go ahead and set up that membership and make it available. So again, if there's something that you might have an interest in, please leave us a comment in the comments section. Now, next week, we got CPI, PPI, and I think what else we got coming out next week? Those are the major ones I think we got. Let me just take a peek. Yeah, CPI and PPI I know we definitely got coming out. But guess what? Starting next week, earnings, full year. And up first is going to be Wells Fargo, JP Morgan, and Citi, and that'll be on the 14th, or actually 14th pre, 16th pre-market, Goldman Sachs, TSM, Bank of America, FNH. So we got the banks, and they're going to kind of start coming in. So we're going to be moving all around because, again, they got a lot of stuff to tell us and a lot of stuff to talk about, and we'll see what's going to happen. But it seems we're usually going from something to the next, you know. But that's going to be that. And this is where I'm going to finish up for today. Again, this is the weekly update, and this is just the S&P 500. And so the next daily, of course, will be on Monday, the 13th of January. Goes fast. Have a nice weekend, everybody.